So this is where these numbers first come from that we see. Now, when we're using them to apply to different markets, the strategy that we're going to work from today is just your basic continuation pattern. So we are going to be looking at things like bull flags, bear flags, but I'm also going to show you how to recognize trend exhaustion using some of the Fibonacci tools as well. So very simply, using Fibonacci for entry timing, within this, one of the types of Fibonacci tools that you can use, and most charting platforms like Ninja are going to have this built in, is the Fibonacci retracement tool. So Fibonacci retracement tool, when we use it and we're looking at continuation strategies, what we are going to be looking at is an impulse move, such as this little A here, and then the correction coming off of the high of that impulse move. So when we are adding a Fibonacci retracement level, we are going to be looking from the low of this impulse wave to the high of this impulse wave. And impulse waves in the market are these moves that are average to stronger than average on any given time frame. So you actually have larger impulse moves that have smaller impulse moves in them. So you guys will see this referred to as like fractal nature of things. So you will see the initial impulse, you'll see a corrective type of move, then you'll see a secondary move, secondary correction, so on and so forth. A lot of you guys will hear this referred to as Elliott wave. I do wave count to some extent, but I don't do it like pure Elliott wave fashion. So I'm a self-taught trader, you guys. So everything that I've discovered in the market, basically I've discovered, hey, other people have discovered the same thing, right? There's not really anything majorly new in the markets. It's just bringing realization and attention to different things that are happening in the market. So when I first came into trading and first started teaching on trading, nobody talked about momentum. So I was like the first person at the expos or anywhere that talked about momentum in the market. And momentum is really just the rate of change at which you have like these impulse moves and then the shifting corrective type of moves. When we go through today's presentation, you're going to see me refer to momentum over and over and over again because it is so important to determine which direction the market is going to go next. If you don't understand momentum, you're going to be at a loss as to how to apply a lot of these Fibonacci tools. So when we go through today's class, we're going to be looking at basically this core pattern here. And the traits that I want you to be familiar with this pattern to start with is, first of all, an impulse move that is average to stronger than average on the upside. Then what we're going to be looking at is a two-wave correction. So when we are looking at the Fibonacci tools, we're going to be adding them to this specific pattern to watch for these continuation moves. I'll also show you guys some little reversal tricks up here at highs too towards the end of the class. But this is the core pattern. We're going to be adding all of these Fibonacci tools to.